Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on American Resource Corporation. I'll go over a summary of the company, its product offerings, recent news, financials of the company, analyst projections, and give it my buy, hold, or sell recommendation. So let's get right into it. So American Resource Corporation is a supplier of raw materials to the global infrastructure market. The company is focused on the extraction and processing of metallurgical carbon, an essential ingredient used in steelmaking. It has a portfolio of operations located in the central Appalachian Basin of eastern Kentucky, southern West Virginia, where metallurgical carbon deposits are concentrated. Now, the company's mining operations include McCoy Elkhorn Coal, Dean Mining, Knott County Coal, Gold Star Mine, and Wyoming Coal, County Coal. McCoy Elkhorn Coal mines and sells metallurgical carbon. Now, the Dean Mining produces and sells pulverized coal injection (PCI) products to the steel industry. Knott County Coal mines and sells PCI and industrial products to the infrastructure industry. And the Gold Star Mine consists of a box cut underground mine. Now, the Wyoming County Coal is a mid-volume to high-volume metallurgical carbon complex with an on-site preparation plant and a rail loadout on the Norfolk Southern Railroad. Now let's look at some news of the company that's hit there. Now, the company announced a few weeks ago that it has secured a base load orders for the production of raw materials servicing the infrastructure marketplace at its Perry County Resources mining complex. Now, the Fishers Indian-based company has previously announced that its contractor has commenced production at the restructured PCR complex under its streamlined low-cost operating model. American Resources said that it secured commitments and contracts are for the product that will be delivered to one of the largest steel companies in the world, as well as specialty alloy metal producers and industrial companies domestically and abroad. That is some great news, I have to say that. Now let's look at news from a macroeconomic standpoint that will definitely have some potentially huge impacts for this company in the next 4 years. Now, President-elect Joe Biden wants to enact a mammoth infrastructure plan that would basically juice up the economy. But please note that this infrastructure plan is in no way a done deal. And if this does happen, I do not feel we will see the stock go to the moon, but I will get into that later. So let's go look at some of the fundamentals of the company. So the current market capitalization is 89 million with a current stock price of $2.29, give or take. The historical revenues were increasing from 2015 to 2018, but did take a nosedive in 2019 to a total of $24.48 million right here, which was a negative 22.35% decrease. The company is currently unprofitable, I have to note that. Now, earnings are forecasted to increase by 179% per year going into the future. It is projected to have a total revenue in 2020 of around 8 million with a negative 4.8 million in earnings. It is forecasted by the end of 2021 to have revenues of around 84 million with a positive earnings of 10 million. That's next year, folks, with a projected revenue of $371 million a year by the end of 2024. That is a ginormous increase in forecast. Now, the company is forecast to become profitable over the next 3 years. I give it till next year, personally, which is considered faster growth than the savings rate of 2%. But we do have to note here the liabilities of this company exceed its assets, so it's difficult to calculate its return on equity. But they have improved their balance sheet recently with a stock offering a few months back. It does have negative shareholder equity. I just have to note that. I feel that the company is trading around 92% below my estimate of its fair value. But let's look at some risk also. It does have only 1 year of cash runaway, so that is a concern. But with the projected increase in revenues next year, I'm not really too worried about their cash runway. Now, the company extremely volatile the past 3 months. A lot of dips and ups and downs. Shareholders have been diluted in the past year, so that's kind of important to note. And it does not have a minimal market capitalization of around 89 million right now, but I'm not too worried about it as well. Now, this stock is more volatile than 75% of the U.S. stocks over the past 3 months, typically moving around plus or minus 15% a week. And this weekly volatility is around 15%. Has been stable though over the past year, but it is still higher than 75% of the stocks. Now on a positive side, the company's 1-year return should look like around 338.6% positive, which exceeds the U.S. oil and gas industry, which returned a negative 26.7%, and the U.S. market, which returned 19.5% over the past year. Now, the ownership breakdown of this company includes 1% institutions, 8.2% private companies, 44% the general public, and 46% individual and inside investors. I like that percentage of individual inside investors. They have a stake in their own company that they're working with. Now I want to discuss one of the comments the CEO of the company just said, and it goes back to this news article. And he goes down here and he says, as a company, we were careful to balance the commitmented production with maximizing value for our shareholders, given the volatility in the market during 2020, said the CEO Mark Jensen in the statement, because half of their shareholders are the insiders of the company. That's huge. Our strategy appears to be paying off, whereby we locked in a base load production in 2020, but have had additional production capacity available to sell in the upcoming strength that we are seeing in the market. We look forward to expanding production in 2021 and meeting the needs of our customers and future customers. The company said it has taken a risk-based approach to its committed sales. It looks like the contracted sales in the range of 60-70% of its potential production from a complex, with the balance being sold to partners on the international marketplace and on shorter-term markets. This strategy was held consistent for 2021 sales, ensuring the company has commitments for productions needed to be profitable, yet having additional availability of production that can be used to maximize value as well as fulfill additional needs of our customers as they come up throughout the year. That's what the company said. Now, the company did add that it continues to focus on running efficient, streamlined operations and being a new age supplier of raw materials to the infrastructure and electrification marketplace in the most sustainable ways. So let's see what the analysts say. Now that we know the news and a little bit of the fundamentals. Now, the overall consensus on this company is a buy. One analyst has it a buy, one analyst has it a hold, and there's no analysts really that say sell. There was a sell analyst about 6-7 months ago, but he hasn't really updated his projection since June. Now, the current target price the analysts project right now on this company is around $3.75 a share. So am I a buy, hold, or sell recommendation on American Resources Company? Here are my thoughts on the bulls and the bears. Let me bring it back here. So on the bear side of thinking, if you're a bear, this is what you're thinking. The company seems highly valued with a price to sales ratio of 75.31% times, one of the highest in the oil, gas, and consumables industry. It doesn't have a cost structure that eats up it does have a cost structure that eats up a percentage of its revenues. That is among the highest of any company in the oil, gas, and consumables fuels industry. To make matters worse, the company is losing money on an operating basis, but I told you there's a projection of $300 million by the end of 2024. AREC has a weak balance sheet highlighted by its negative owner's equity. Most likely this was caused by cumulative losses which negatively impacted retained earnings. Additionally, the company's debt load is greater than its assets, while day-to-day operations are losing money. So basically on the bearish side, there's a lot of financial risk to this company. But on the bullish side, let's talk about the bulls out there. The company will be ramping up to meet coal production at its Perry County facility soon. The run rate will hit 1 million tons per year by the end of 2021. The company has a rare earth division that is moving ahead with a production strategy, which should add enormous value to the company. The company has also recently taken steps to strengthen its balance sheet. So overall, looking at its balance sheet and the projection of the revenues, I'm not really too worried about it, but some of the bears are. So I feel that this company is well positioned to break out into profitability and share appreciation in 2021. The company now has 3 businesses, each of which promise substantial value going forward. The balance sheet, which appeared challenging as of the end of last quarter, has been enhanced with cash generated through an equity offering in October 2020. With the balance sheet strengthened, the company is poised to generate strong cash flow as 2021 unfolds. it would seem entirely possible that the company will be generating gross revenue of 20 million per quarter by the end of 2021. That's huge. It's also quite likely that the number could be a lot higher due to strong met coal market. Now, there has been times when met coal trades are above $150 a ton, so that in a sufficient strong met coal market, the company could be a home run. The company has given some margin estimates, and based on these, it would seem that a 20 million quarterly gross revenue, net revenue, could be at least 5 million a quarter or 20 million a year. This would produce nearly 60 cents a year in profits and could boost the stock to the low teens. So am I a strong buy? So I am a strong long-term buy on this stock with caution to figure out the right point to enter. I feel that any price below the $2.50 a share is a good price point to buy in and hold for the long term. About 1 to 3 years, my price target would be in the low teens of around $10 to $15 a share. And then in about 3 to 5 years, if they hit their revenue projections of 300 million, we could be seeing a fair market value of $32 a share. Now, this stock is definitely for the risk-tolerant investor. Now, the company is aligned with at least 2 important current investment themes. The met coal business fits in well with the infrastructure theme. It is likely that the Biden administration will push hard for infrastructure investment, partly because it is desperately needed and partly because it will help reinvigorate the economy. Now, investment in infrastructure will require large-scale increases in steel production, and that will strengthen the market for met coal. This company is perfectly situated to benefit from that dynamic. Also, one might also ask about the complex relationship with China, because you're looking at raw materials, you have to look at China as well. It is very likely that with respect to a strategically important product like rare earth materials, there will be a strong political pressure for the United States to increase its independence from the Chinese sourcing. Again, the company is well suited to benefit from this development and getting itself into the position from which it could ramp up production and use its exclusively licensed technology wherever there are stocks of coal mining byproducts. Now, still be aware that this is somewhat speculative investment, and there are some risk factors, including the operational costs associated with ramping up production at the Perry County facility, the met coal market, and environmental issues to boot. So my long-term buy on this stock is betting that the Biden administration throws out a few $1 trillion to an infrastructure plan, and I predict this stock will skyrocket to the moon. Well, hopefully a nice increase from $2.20 a share all the way up to 30 over a 3 to 5 year plan. That would be a really nice thing. Now, what are your thoughts on this stock? Please leave your comment down below and give me your thoughts. Do you think it will stagnate, or do you feel that the political market conditions, macro conditions out there will push this stock to the moon over the next 1 to 3 to 5 years? I am so happy I got to take a look at this stock that has huge potentials before a huge rally has already taken this stock to the moon. As you can see in my previous videos, I was doing the analysis after stocks already climbed like 500, 600, 700%. And I'm like, oh, I wish I would do a stock analysis before it goes to the moon. So this might be one of those. Now, there you have it, folks. Now, don't forget to smash that like button down below and consider subscribing if you like to hear financial news that could benefit you. Now, until the next stock update later today, which I'm going to do a few more today, I'll ciao for now.